Do you have what it takes to be a successful trader? Hello and welcome to this week's US stock market report. I'm Gillham, Chief Analyst at Wealth Within. This week I'll be discussing whether you have what it takes to be a successful trader, the Dow Jones Index, and some interesting stocks on the market right now. Before we jump into the report, I'd just like to mention if you have any thoughts on investing or trading, please comment below and subscribe to our channel to keep up to date with our new content. So let's get into the report. It said that 80% of traders lose, 10% break even, and only 10% profit over the medium to longer term. So that begs the question, do you have what it takes to be part of that 10% who consistently profit? Now, every week I come across a range of traders with different styles and approaches to their trading, and it's no surprise that most of them don't make a profit. And worse, after chatting with them, I find that for the most part, with the way they approach things, they have very little chance of successfully making money. Now, it does not matter whether someone is a beginner or an experienced trader. There are a few common characteristics that I find amongst those who are highly likely to be successful. Now first, let me get rid of the elephant in the room. Just because there's lots of free information about trading on the web, it does not mean what you find is any good. And just because you look at the information there, it does not mean that you'll magically become a trader from it. Remember, you will always get what you pay for. And so if you want to find out what the 90% who are not profitable do, then keep surfing the web, because this is where they live. Now, there's a common misbelief out there that trading is highly technical, difficult, and not for the faint-hearted. This misbelief often keeps people from trading. However, nothing could be further from the truth. It is not hard to learn to trade. You just need to have a desire to put in the required effort. I'd like to mention a quote, and I want you to consider it thoroughly. Nothing worth having comes free. Like anything worth doing, being armed with the right attitude and the right education will ensure you can be successful. Now, when it comes to trading, if you have the right attitude, it will mean you are willing to put in the work to gain the knowledge of the 10%. So here's a list of things you must do to be part of the 10% of traders who succeed. Firstly, be honest with yourself. There's an old saying, what a wise man does in the beginning, a fool does in the end. When I ask people about their trading process and what rules they use, I find that so many have followed the path of the 90% and few of them see their own mistakes. Next, get a good education. If you trade without the right knowledge, the market will eventually take your money, and your education will become quite expensive. Taking shortcuts in your education means you'll end up taking higher risks than you need. Next, develop a solid trading plan. The 90% who fail to properly plan. They have missed or ignored this critical step because they either don't have the right knowledge or they don't think they need a plan. Both fall under the heading of living in the hope of getting it right, or what I like to call, they practice the buy and pray method of trading. It's plain simple. If you do not know that you'll have a high probability of success, why would you trade your hard-earned money? Next, get committed. Having the right attitude when it comes to trading successfully is critical. Be clear about what you want to achieve, why you want to do it, and then commit to it. A successful trader commits time and money to developing the right knowledge, skills, and gaining the experience in the market. Shortcutting yourself here leads to poor results. Lastly, get started now. It's all well and good talking the talk and waiting for something to happen. However, if you're not willing to walk the walk, it's worthless to you. Procrastination is the enemy of success. The more you procrastinate, the more likely you won't get around to it. You have to be willing to take the first step and get started. Remember, what a wise man does in the start, a fool does in the end. Getting started may seem daunting in the beginning, but like every challenge, it will be worth it in the long run. Most importantly, it doesn't all need to happen right away. Everyone takes a different amount of time. The crucial thing is to get started or it won't happen. So it's your choice. Do you want to be one of the 90% or the 10%? To be part of the 10%, you need to be different to the masses. Now, being different means you'll have the foundations to be a great trader. So let's get into the charts. Alrighty, on your screen right now we've got a weekly chart of the Dow Jones Industrial Average. And remember last week I was chatting about that if the market did fall, or the Dow did fall, and it fell below that pattern that we talked about, that rising sort of flag pattern there where it dropped out of if it was going to hit the bottom of that or drop out of it. Well, last week it actually dropped out the bottom of that, which is a more bearish signal for myself anyway. But it opened at 24,463 and it had a low of 23,997. Closing, interestingly, it closed at 24,271. So if you look at the close, it's about halfway along that bar that you're seeing on with my pointer on at the moment, and that's an interesting sign, which means the sellers came in to push it down lower, but then the buyers came back in later in the week to get it back up there. Now, interestingly, there's a couple of days into this week, or 1 day into this week at the moment. And we can see, so it's opened a little bit lower here. But I don't think that this is not going to be bullish at the moment. I think it's going to be a little bit more bearish, the Dow, which is what I've been leaning to for the last month or so, that it is a bit more bearish. I'm thinking it only needs another push down. It'll break through that 23,805. And if it does break through that, then it will drop below this low here of 23,344 on its way down to into this sort of area around that 22,320. I think it is more bearish. It may just be an exhaustion of a run, which means you might just fall over 1 or 2 weeks, must not fall quite fast getting down to those levels. But I think right now is now not the time to be getting into lots of stocks in the US market at this point in time, or at least not the stocks in the Dow at this point in time. Today I want to talk about a couple of stocks. The first one I want to talk about is Walgreens. And you can see there I put a price retracement on this at this point in time. Some people call them Fibonacci's on their platforms. I don't tend to use the platform as what they do, but all I've done is measured the range from October 2008, its major low, through to its high here in July 2015. And it's been moving down quite steadily since then. And interestingly, with Walgreens, if I look at it, you can see that was its all-time high more recently. So that period of time from that all-time high, it's fallen down half of the distance it rose between 2008 and 2015. This is quite significant. If this starts to move up from here, then I'd be looking at this, putting this on my watch list. So actually, I'd be putting it on my watch list right now for it to start to move up, because if it does start to move up from this point and show some signs of strength, then this would be a nice buy, because what would happen, it would indicate that it would trade above that previous all-time high of 97.27, and so that's a nice little run here. If I put my little price range tool on it from where it closed last week up to that high is nearly 62%. And so to me, that's a really good stock to put on your watch list right now. The other stocks I want to look at is, one is Amazon, the other one's Pfizer. And Amazon, what I'm looking at here is everybody is talking about Amazon. I mean, it's doing some expansion. It's doing a whole lot of things. It's one of the world's biggest retailers now with what it's been doing. But you can see how more recently it's going more vertical. So on your chart, you can see here how I've just drawn some basic lines, just showing you how the speed keeps going up higher and higher and higher. And this what's happened, and this is what Buffett talks about, being a buying doom, selling boom. And boom is normally you get that rampant speculation. And when rampant speculation is happening, you get more vertical. They don't last very long, those runs. And as you can see here, it's getting more and more vertical, and it's even starting to run away from this line that I've drawn through here. So if it does keep going up, I don't think it's going to go for too much longer. It might only be, maybe it could only be a few weeks, it could be a whole year, but it's not going to be running at this speeds for too long before it does have some sort of significant pullback in price. And the significant pullback in price will probably be somewhere between 20 and 30% when it does do that. So right now, would I be getting into Amazon? Absolutely not. If I'm in Amazon right now, would I be getting out of it? No, I wouldn't be doing that either. I would be sitting back waiting for it to hit a high and seeing if it's weak. A couple of little things that I'm seeing here at the moment on this, and this is a monthly chart of Amazon. If I just bring it back to where it was before the whole thing moved on me. There we go. You can see here how last month, June, it traded right up to the high of 1763 and came back about halfway along that bar. So it's exactly the opposite of what I was talking about on the others, on the Dow Jones. And what this is suggesting is a little bit of selling coming in later in the month to push the price down. So if this bar is quite small, the July is not, it's small or starts to drop away, then you may see it drop below that line and start its move. Now, as I said, right now it's not the time to get into new positions into Amazon. Let's have a look at Pfizer, the other one I wanted to look at the moment. You can see here there's a lot of resistance of this for this stock around that $37 mark. It just hit it a few times right across history. It's just a natural level of resistance. And if I just expand this level up, you can see here how it hit it, well, pretty close to it in July 2015. Again in July 2016, it just opened above it in August 2016 and fell away. Then we've got 2017 October, it hit it, pulled back a little bit. Then in January it blasted through it, then came right back onto it, so it closing at 37.04. And since then it really struggling to get through this level. If it breaks through this level, then there's blue sky above it pretty much, and that's really what I'm suggesting. Is right now it's hit this level so many times, and the important thing, it hasn't fallen away significantly from that level, especially in the last sort of 6 to 12 months. That's suggesting me the sellers aren't wanting to push this stock down, rather they're wanting to hold it up there. So what you're looking at there is more buyers do come into it, then it's going to push it through that $37 level. And then, as I said, blue skies are above. So it's another one I'd put on my watch list at this point in time. So that's it for me on the charts this week. If you do want me to look at a stock for you, please, you just need to put a comment down below saying, hey, Dale, have a look at whatever the stock is. If you have any questions, please let me know. And remember, just push that little button down there on our globe and subscribe to our channel to keep up to date. Good luck, good trading, and I'll talk to you next time. Bye. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.